Welcome back, folks. Episode number 8 of the Get a Grip on Life podcast. What are we talking about today? On today's show, we have Blake Linklater. Who's he? He's a financial planner. An interesting one at that. He had a whole take on, his typical client is in between the ages of 40 and 65, kids, that. And we talked about financial planning, life, wills, all sorts of stuff. Yeah, you may not think this is interesting. You should listen to this because at some point you're going to need to start thinking about this sort of stuff. Insurance. Guess what? The younger you start, the better off you are. So listen to Blake on episode number 8 of the Get a Grip on Life podcast. Who sponsors this show? What do you think? Get a Grip Studios. Come on down. That's right. You want to start your own program. You want to start your own show. You got a message out to put out there to people that you think you can build your brand with, but you don't know what to do. Well, how do I get the camera set up? How do I produce the show? How do I put it out on social media? How do I get it on YouTube? How do I build a channel? All that sort of stuff. You know what? Forget about all that. Just come down to Get a Grip Studios. Go to getagripstudios.com and we can get it going for you. That's right, folks. Getagripstudios.com. That's right. If you want to start your own podcast, do it. Don't waste your time trying to figure out the technical side like I did. I wasted so much time trying to figure out. I should have been just recording episodes. Instead, I was trying to figure out all the technical side of it, and I wasted a lot of time. But I ended up building a studio that you can use. So go to getagripstudios.com. For right now, we got Blake Linklater talking financial planning on the Get a Grip on Life podcast. Welcome to the Get a Grip on Life podcast, Blake Linklater.
Thank you.
How do you tell me a little bit about the Linklater Group? What do you guys do?
Yeah, so we are a financial planning firm, specializing in small business owners, families, and busy executives. And what I like to say really is what we do is we make your financial pain go away. And so we do that by really identifying where you are now and where you want to go, and then creating a roadmap to get you there. And it could involve a variety of things. But it's identifying, okay, you're at A, you want to get to B, be it retirement, be it selling a business, whatever it is, and creating a roadmap to help you get there and eliminating some of the financial pains that can come along the way.
How many people work at Linklater Group?
So right now it's myself.
Okay.
And then I have a team of support people behind me that they're not employed by me, but they work with. So on the investment side, they help me out there. Estate planning stuff is on the back end too, and then some back office people that help me out with, but they're not on payroll. Okay,
and then so you specialize in small business owners. What's a small business? Let's define that first.
Yeah, really. Primarily, 10 employees under.
Okay,
is really their revenues could be anywhere, $250,000,
sure.
Couple million.
Sure.
It depends. It's all over the map, but generally they're under 10 employees is the best way to put it. They could be incorporated. They could be a sole proprietor, and they could be generally all over Ontario.
Okay.
But I can work all over Canada. So, but right now, just most people are in Ontario.
Okay. And you've been in the business for 5 years.
Correct.
What are some of the qualifications you have?
Yeah, so I'm a registered retirement consultant.
Okay.
And I'm currently working on my CFP, which is a certified financial planner.
Okay.
And then after that, we'll see which way I go, whether I want to do another one for a CLU, which is a chartered life underwriter. That one deals more on like business taxation issues.
Okay.
I'll stop at that for now because I find in my industry there's so many designations.
There's a lot.
And when I ask people about them, half the people don't know what they mean or what they do. So in any industry, really.
No, your industry's the worst.
It's probably the worst ones,
Yeah, yours is the worst.
You could have alphabet soup after it. So
the
one I'm focusing on is the certified financial planner, and that's the gold standard.
Okay,
from a financial
that's the
planning.
number one. CFP is the number one.
CFP, yeah.
Right. So, but do you need to should you have a CA to have a CFP or?
Nope. You can have a CA and then you bypass some, and it adds on, and you bypass some of the tests you have to take.
Okay.
But the CA is more accountant focused.
Sure.
And whereas the CFP is more planning focused.
Okay, so what do you learn when you're taking your CFP?
Yeah, so really learning everything from retirement planning. You're learning taxation issues. You're learning corporate taxation, but not to the extent of an accountant. You're learning, different corporation structures. You're learning old age security, disability. You're learning about wills and estates. You're learning about business succession planning. You're learning about, we mentioned disability estate planning, wills and estates. You're learning, literally, it's everything under the gamut of financial planning that can cover, from A to B, from government pensions to corporate pensions to group benefits with pensions to health and dental plans, and then how they all work together to come up with that roadmap.
Sure.
The plan is nothing more than a roadmap of where you are now to where you want to go. Is
there only one road on the map?
Depends on the client. It's a good question. There could be different roads leading to different
detours
goals.
Here and there.
There's always detours. That plan, I tell my clients after we meet, that plan, the minute I hand it to you, it's out of date.
Sure.
Because things have changed.
Sure.
For instance, the markets have changed the minute we hand it to you.
Right.
But like a pilot, when a pilot's flying from New York to LA, they're off track 99% of the time. Not by a lot, but they're off track, and they're making minor adjustments. It's the same thing we're doing. So we're off track, but we're course correcting every time we meet. We're making sure we're staying as close as possible, so that we don't end up in Las Vegas when we want to end up in LA.
Sure. What are the various things that a CFP allows you to do that just other industry accreditations don't allow you to do? Or is there not? You're allowed to do whatever you want.
You're kind of allowed to do what you want.
So I could go out and start planning people's finances and wills if I wanted to?
You could, yeah. I mean, obviously you can't do the will. A lawyer needs to do the
sure.
will.
So I bring a lawyer and I bring an insurance guy to do the universal life policy for them or whatever, and I bring another guy. I could go sit down with someone and say, this is what you should do. Here, set up a private health services plan in your business and do this and have a universal life insurance policy and then invest in these stocks and bonds. And Matt would say buy some, what is that, Bitcoin or Ethereum.
Yeah.
And then, have some physical gold.
Yep.
And you're good to go.
And you're good. And that's
did I just lay it out there for you, Blake?
You kind of did. It's and that's one of the problems with our industry. It's heavily regulated, but in terms of what, all the different things you can do and what's needed to do it, it's not. And certainly to sell the stuff, to sell insurance and investments, you need to be licensed in that, and you need to be regulated by that. And it can be suspended if you're audited and things are wrong. So to sell those, the life insurance, the UL, the investments in the stocks, you have.
But you're not actually selling those. You're bringing that package of things together for people and making the roadmap.
You could, and I do sell it. So.
Oh, you do sell the insurance.
I do sell the insurance.
So you're a licensed insurance broker?
I'm a licensed insurance broker.
Okay.
Exactly. Yeah. And then
what are the letters for that?
there are, there are none for that. But
LIB, CFP, it keeps going.
LLQP is the test you take to do it.
Okay.
But no one really puts it on there.
So your life insurance broker, do you represent a single brand, or you look at the marketplace as a whole and select Manulife over this company, or how do you go to market with your insurance?
So I go to everybody. So I'm a broker, so I have access to everybody.
Okay.
And I have I favor 3 or 4 partners depending what the need is.
Sure.
And how I want to run.
What's the most popular type of insurance you sell?
Most popular? Probably
to the business owners. Term.
To the business owner, it's a bit different. To the business owner, we're looking at whole life is probably the most popular, and critical illness.
Critical illness, okay.
And and disability, depending on each business and the stage.
Sure.
Terms very popular. Families.
Universal life's not popular.
Not as much.
Okay.
Reason being, there's a lot of flexibility. It's it's complex.
Yeah, it is complex. I have 2 universal life policies, actually.
So, you can understand and see how complex they can be then. Whereas whole life acts the same way, but instead of you picking the investments on it, the insurance company will pick the investments.
Sure.
So it costs a bit more.
What's the difference between whole life and like a term to 100?
So term to 100 is really you're paying the same amount. You're going to get the coverage. Could be term to 100. There's no investment component.
That's the difference. But it's a whole life policy with no investment component?
It's just a term. They call it a term because at age 100, it's done.
So if I turn 100 on my term to 100 policy, it's gone?
Depends on the company. Most will let it. Most at 100, you turn 100, it's fully paid up. It'll still cover you.
My term to 100, I bought it when I was 25, but it's been sold 3 times, my policy.
Oh, to a different company.
Yeah,
yes.
It's gone from I can't remember now. It's been like I get a new thing. It's like, oh, now it's owned by this company.
Yes.
3 or 4 times I've gotten these notices, and it kind of makes me look. Transamerica owned it.
Okay.
And then before Transamerica, it was another company, and now it's a new company.
Yes, Avari, I think.
Avari, yes.
They
And I'm like,
bought,
what's this about, man? I can't, like, I don't like the way it's getting flipped around like an old, an old T-shirt or something.
Many years ago, maybe 10 or 20 years ago, a lot of the insurance industry went through a bit of consolidation.
A bit?
And a lot in some, there's some changes.
Some when people went bust.
Some people went bust, yeah. And but so what happened in that case was companies picked up those policies because they don't want it to go under. They don't want the people not to get their money. So, but
Transamerica didn't go bust.
No, they didn't. They just got bought out by Avari.
All right, and Avari is like a Dutch company or something.
I think
like
so,
that, isn't it? Yeah.
Yeah.
So what does that mean? Like, do they have to obey all the Canadian rules still?
They still have to obey all the rules. They're still protected. So as a client, you're still protected by Assurance, which is the insurance industry.
Is there a cap on that? Like the
$100K.
Okay.
Yeah. But typically, like God forbid, if something if they went under,
catastrophic failures.
Yeah,
okay.
Some other companies would step up, like Manulife would step
take
up
over
would take over that book of business.
Okay.
And buy it out or.
Why
whatever.
would they do that? Like Sun Life or one
Goodwill.
of these guys? Yeah, Goodwill for the industry.
Goodwill, and it's goodwill for the industry.
Huh. Okay.
And I mean, they'll have to pay out on it, and they probably pick up those policies for pennies on the dollar.
How do you feel about the stock market right now? And do you get into any of these like complex trading mechanisms, like exchange traded funds and all this kind of stuff? Do you do much of that?
I do a lot of that, not the complex stuff. So when I do plans for business owners, for families, retirement planning, the concept depends on each goal. It's more of a goal-based planning, but I do like to use the ETFs a lot through, and I do that through. I have a partnership with a robo-advisor. Kind of like
Sorry?
A robo-advisor. So have you heard of Wealth Simple?
No, what's that?
Okay, so Wealth
You
Simple.
have a partnership with a robot?
Well, that's almost what it is they are.
I don't know if you can have a partnership with someone who's not human. If it's not a human.
Well, it's a robot, and it. A robo-advisor is. How do we put it simply? Basically, they use computer algorithms. So you input your questions to their risk tolerance, and if you've done any sort of investing with a bank, whoever, you're going to fill out a risk tolerance. Okay. And so they do that, and then they use low-cost exchange-traded funds to put that portfolio together. Okay. And so it's low cost, and they monitor it daily and rebalance it. So the benefits are low cost, and then their computer algorithms monitor it to make sure it stays within the parameters of whatever you set. So the benefit is it's low cost. You kind of set it and forget it, and it's going to help you. It's passive investing.
Wait, like do you put some stop losses on it and stuff like that, or what do you do?
It's up to you, depending on like for me.
It's up to you.
If you're doing it on your own, it's up to you. So for me,
I
work with my when I work with my clients, I'm like, well, at what point are you going to say, Blake, what the hell, what's going on? And at what point are you going to call me and say, I'm really worried? That's kind of the stop loss. Like I keep an eye on it, and if they tell me, oh, if I lose 20 grand, I'm really worried. Yeah, I'm keeping an eye on it and being like, okay, our portfolio is down 10%. We need to take a look at it or to update you on it, because maybe we're just going through a massive correction, and it gets totally personal.
How often do you tell people chill out, just hold?
Almost daily.
Yeah.
Especially in today's market.
Sure.
The stock market.
The whole
volatile.
stock market falls apart, dude. It's not when I started investing,
Yeah.
before there was like robo traders and this stuff went out, you have a broker, you call them up.
Yeah.
You're looking in the newspaper to see where it is. Like that's what I would look in the beginning, was in the newspaper.
Yeah.
And look at the stocks from the day before or whatever. And, consumer goods would fall apart, or energy, or banks, or what.
Yeah.
Now it seems like the whole thing gets wiped out.
The whole thing can, and nowadays information is at the click of a button.
Sure.
It's what did I read once? Today's like average consumer has as much information as a Merrill Lynch broker did, 20 years ago.
Sure. Maybe more.
Probably more even, yeah. And that's
if he wants it, if he or she wants the information, it's there.
And that's good and bad. But knowledge isn't power. And I work with
knowledge isn't power.
It isn't. It's just knowledge. It's just information.
Information.
Yeah.
Well, wisdom is power.
Wisdom is, yeah. I mean, the biggest detractor to performance is investor behavior. The problem is
you're trying to blame it on your clients now, aren't you, Blake? Come
really.
on, man.
I never blame the clients. I'm just trying to put in a blanket statement out there.
Sure.
Because when
But that's what it is. That's what the stock market is. It's investor
emotional.
behavior.
It is
dude.
investor behavior. It's emotional.
Like the gold has no value and has tons of value at the same time.
Very much so.
Like it's it's just like it's this proxy in our heads for something that no matter what happens, even if China drops a bomb on the United States, if I have the gold, the guy who has the gold makes the rules. So I want some gold.
I would want physical gold.
Oh yeah,
Personally,
I would.
I
This
wouldn't want
idea
this
of buying gold and putting it in
Yeah.
someone else's hands, that's a scam.
Yeah, I wouldn't do that. I mean, give me like physical.
The whole purpose of owning gold is that you have the gold.
Exactly.
It's not that someone else has the gold and you have a piece of paper that says you can get it.
No, you want the gold in your hand.
Yeah, give me the gold.
Yeah, so that if hell breaks loose.
That's the difference between Bitcoin and gold.
Exactly.
Like Bitcoin is like, okay, what if the electricity system implodes?
Yeah.
Apparently, I was reading a thing that one Bitcoin. Oh, Matt, you're gonna have to tell me one Bitcoin blockchain update.
Yeah.
Uses as much electricity as a single-family home for a month.
Really.
It's extremely energy intensive.
I got to look into that. I don't know much on Bitcoin. I try to understand it. My clients ask me about it. I lead it.
But let's say the whole thing falls apart. Like I'm not talking about the markets fall apart or there's a correction in the markets. Let's say we get knocked back into the 1850. Bitcoin isn't worth anything.
Bitcoin's worth nothing.
That'd be incorrect. There are paper wallets that you can record.
Oh, he's a Bitcoin lover.
transactions.
Right. So but I mean, what I'm saying is that if we lose modern Western civilization as it stands right now with computers and all that, I'm going to say Bitcoin's worthless and gold increases in value exponentially.
I would agree. Yeah, I mean, I think if all hell breaks loose and we go back, I would
if America and China go to war.
Yeah.
And there's an end to the war, and the gold is the most valuable thing everybody has.
I would. Yeah. I
agree
would
with
want
that?
some physical, but I'd want like that.
I want the bar.
Give me the bar.
Yeah, sure.
So that when hell breaks loose, I know it still has some value. I wouldn't want to put everything in it, obviously.
No, obviously not.
But
right.
if God forbid we're going to war again and it's the end of the world.
Or some solar flare blows up the electricity system.
Yeah.
Or whatever, and everything's gone.
Then
You have the guy who's got the gold's going to make the rules.
yeah.
That's how it's going to work.
I
The
mean,
golden rule.
I think so.
Huh.
It's a personal opinion, but I think
So we agree on that.
we
Good.
agree
I
on
like
that. So
Okay. What about paying? Okay, so retiring comfortably.
Yeah.
It's an issue for small business owners. And I'll tell you kind of some of my concerns. Okay.
Mm-hmm.
Number one, I don't plan to retire, and a lot of business owners talk like that when they're 41 years old, like me.
Yep.
But then they roll into 59, 60, and they're like, "Oh man, if all my buddies are playing golf or whatever, and I'm still slinging light bulbs down at 3800 Victoria Park Avenue, whatever it is."
Yeah.
So, and the second thing is that for small businesses, you don't have a pension plan to offer your employees, whether it's fixed defined benefit or whether it's what are the two types? There's the
Defined contribution.
or defined payout or whatever it is, right? So I don't have either of those things, and I kind of think about the people around here that work for me. And I think, gosh, we're all young now. Some of us are, some of us are older, but it's like what can small business owners do for themselves and then in turn for their employees? What would you recommend?
Yeah, so if I understand you correctly, what can small business owners do for themselves for retirement and for their employees?
Yeah, like those are two different questions, I think.
Yeah, yeah. First for their employees, if you have a group RSP or group benefit plan, make it easy for them. It doesn't have to be a defined benefit plan. You can just
you couldn't do a defined benefit.
No, a small business owner
no,
couldn't do it. I mean, in theory you could, but you don't have the. There's just too much there. And you could do it as a defined contribution.
Sure.
You could do it as profit sharing.
So what would you do in that? Like, what would you invest it in? Stock market? Would you invest
it'd be in stocks or bonds or mutual funds.
Okay.
And we could set it up where the employee has control over it.
Okay.
Where they can go in and pick their own investments from a selection, and we would work with companies like I have a Sun Life, Manulife. There's a lot of them.
So they would have like 400 different baskets of equities they could buy, or different bonds they could buy, or a combination.
Mutual funds usually in that case.
But the difference between those things is usually like 1.5%. That's what I've
minimal.
seen.
Yeah, it's minimal.
Like you're like, Canadian Trust Services Bond A.
Yeah.
Canadian Trust Services Bond B. Projected payout 2.10%, 2.3 medium risk, low. It's like, what the heck is this?
It is true, and so where it comes in, and I think the important when you're getting started is to have that advisor work with you and the client and your employees to set it up, because like you said, there's 400 of them. There's 200. Doesn't matter how many.
Sure.
People don't know.
They don't know
and
what
they
to
don't want
do,
to spend
dude.
the time to go through. Oh, do I do this? Do I do
No,
this?
man. You know what? The other thing too, I think just helping them save money is a good start.
Exactly. Just make it easy.
Yeah.
You don't
like
have
here,
to match a group
I'm going to
RSP.
take. What if we just started like you say? Okay, look, set up a tax-free savings account
Yeah.
and put 5% of all your money into it, and it's an automatic GIC for 5 years or whatever.
Exactly.
Automatically goes to a GIC. Just start with that. Would that be a good thing?
I
to
think that's a
start
good idea. Yeah. Not necessarily the GIC, but make it easy. You can set up a group TFSA.
Can you make it tax deductible or something like that?
Not on the TFSA.
No.
But on the group RSP, that would get tax deducted for the business owner.
So would
you're
you
getting the benefit.
Yeah. So would you suggest maxing out the RSP before doing the TFSA, or would you say
as an employee?
For like
yes.
an employee, yes. Yeah. And then so if
the goal is retirement.
Sure. Yeah. I mean
if
that's
it's
what
not retirement, we have different goals.
I mean savings. It can be I want to buy a car, I want to buy a house or whatever. Then you're going to go TFSA first because you want access to that money, right?
Exactly.
It also depends on what their goals are.
It does depend on their goals. But if the goal is retirement and you're setting up a group RSP,
sure,
we're assuming the goal is retirement.
Right.
Because most people, they're not saving enough.
Sure.
And they're probably not earning enough either in today's economy with 2 kids and 2 cars.
I think everyone here is overpaid, Blake.
Fair enough.
No, I'm just joking. Of course.
But so make it easy. You can match it. The employer can match and get some tax deductions on it that way. Or you cannot. That is the employer's call when you look at your finances on it that way.
It's interesting because I'm listening to you here. It's like really what it is that you need to start having these conversations with yourself, with your wife, with and then you can extend those to your employees where it's like how much money are you putting away?
Yeah.
What are some of your goals? Okay, would you want to save for your retirement or would you just want to save some money? And then that changes the dynamic of what they're thinking of doing.
Absolutely.
Huh.
Have the conversation, get to know. And if you're a small business owner, you have, 10, 50, 20 employees, you can kind of know them. You can do it over a survey. You can do a short survey over email. But make it easy. Make it easy for them. And the simplest way is take it off their paycheck. Whatever they
at the source. It's like a source
source.
deduction. Yeah, for sure. People don't even know how much money they make.
Yeah.
Because they don't even look. Now they don't get checks.
Right. Yeah, they just get it deposited.
They don't even look at the slip. Nobody even opens the slip.
Yeah.
They don't even know that, hey, if you make $100,000, 38% of it's going up to Ottawa.
Yep.
To Sudbury, actually.
Yeah.
And then did you know that Sudbury, I don't know if this is true irony, if there ever was irony. Okay?
Yeah.
So I believe that Sudbury is the deepest hole in the earth. Okay, because it's a meteorite crashed into it.
Okay.
So there's like an impression from a meteorite crash. And I think they went down however deep they went.
Yeah.
So it's the deepest in the human crust that humans have gone. Isn't it interesting that the CRA put their tax collection center there? In the deepest pit in the world.
In the world. That is coincidence.
Yeah, it's irony.
It's a bit of irony.
It's irony, man.
Yeah.
The deepest hole in the world. It's definitely the deepest hole in Canada anyway.
And let's throw all of our CRA people in there. Yeah. So that's, on the employer side, that's a whole different game. Most employers, most business owners, they don't want to retire. Like you said, they want to slow down maybe. I mean, the guy where I take my car to, I don't know how old he is, but he's got to be in his 60s.
Sure.
Maybe 70. And he's just running. He's the one who takes me back home when I get my car and picks me up.
Yeah.
He just sits in the office.
Yeah, sure.
I mean, he goes back in there now, but he's got like 6 or 7 guys who do all the mechanic work and everything.
Yeah, sure.
So I think a lot of people want to do that, and maybe they do it because they don't know. They don't want to do anything. They don't know what else to do. Although I think in his case he does. It's just they don't.
You know what I think?
They love the business so much.
No, you know what I think it is. This is just crazy me. I don't know shit about psychology. I'm not studying that. I'm just like a light bulb guy here in North Scarborough or whatever it is. What I think it is humans don't like to change. Okay?
Yeah.
And there's something called the status quo bias. Okay? And then there's the sunk cost effect. And I also think like people like to have things plotted out for them. So I've done anecdotal tests where we have a private health services plan here for my business, and people can opt in, and we've done it where they opt in and they opt out, and I don't say anything. I just hand them their contract, and I go through each one for them, and they generally do whatever the opt in, whatever the natural thing is, they'll choose it, even to their detriment. Even to their detriment.
It makes
I say, your private health services plan is X amount of dollars per year.
Yeah.
You're automatically opted out for this. It'll say this in the contract. I've done this anecdotally and just leave it there. Or you can opt in by checking here. And I think people read it and they don't know what it is. So they're like, it's automatic. Okay, next.
Yeah.
And they don't ask questions about it. I've seen it so many times.
Yeah.
So I think a lot of humans, if you're an entrepreneur and you've been an entrepreneur for 30 years, it's like if you work in a corporation, they're like, it's time for Blake to retire.
Yeah.
You're getting to be 65 and we've saved all this thing. It's time for the party. It's time for you to move out the door and move on, right? And that process happens in corporations and in government jobs and businesses and all that, and people get moved out the door.
Yep.
Right? But if you're a business owner, it's like, well, I'm making money. I feel good. I get up in the morning. I'm just going to keep it going. Status quo bias. And I don't think it's actually an intentional choice. I don't think it is. I don't think it has anything to do with needing money or not. I think some people need the money. I think that there's that there too. But I think a lot of entrepreneurs have done very well. Maybe they own the house, they own the cottage, they work 3 days a week, they don't work in the summer, whatever. They're just like, I'm just going to keep it going.
Yeah, I agree. I think it makes perfect sense.
You think? I think that's what it is. I mean, you talk to a lot of these people every day.
Yeah, it fits. I'm like,
You should ask them that when you're interviewing them. You say, do you think you're staying here because of the status quo bias? And like, huh? Well, let me tell you about the status quo bias. Yeah. I mean, people just keep doing what they're doing, and a lot of times there's no reason.
Yeah.
It's just that's what they're doing. That's what they've always done. They're going to just keep doing it.
Keep doing it until they die.
Yeah. I know tons of guys like that. Like your auto guy.
Yeah.
I mean, I sell light bulbs to these guys for years, right? And like different customers.
Yeah.
I go around, I'm thinking, my dad comes in here. He's in his 70s. He comes in every day. He's just like, and he's gone for the summer, but he comes in every day. And he's just like, he loves it. But he doesn't love it. He just this is what he does.
Yeah. That makes perfect sense.
Doesn't it?
Yeah.
I don't know.
So
retire comfortably. When you're looking at someone to retire comfortably, like what age is an entrepreneur thinking about retiring?
Never.
Yeah. No, but I mean, honestly, like people are living longer now.
They're living longer, and even so when we talk,
and it's harder to save. The stock market's not as performing at 8% anymore, or maybe it is, but it's harder to access that. Yeah. What are you advising people the age to shut it down at?
Whenever they want. Either slow down.
Yeah, what would you say though?
You know what? I think it depends. So when we look at, especially kind of tackling a little bit of two questions there, the small business owner who wants to retire, it's really coming up with that plan and just sitting down and thinking about it. Mm-hmm. What do you want to be doing in retirement? Do you want to just slow down?
Yeah.
Do you want to golf 2-3 times a week? Do you want to go on the yacht, and sail a couple times a week? Do you want to just work in the business once a week? So the first part is getting them to picture what retirement looks like. What do they want to be doing? If they stop work completely, their wife's going to kick them out of the house, after like a month.
Yeah, that's so common.
Because you really want to be, like, when you're retired, every day's Saturday. Do you guys really want to spend
that's so weird,
7 a day with?
So I've been married married for almost 16 years now.
Yep.
And I have 4 kids. When my first daughter was born, okay, I stayed home for 1 day. And then my wife's like, why don't you go to work? Come back for dinner. I'm not kidding you, dude.
I believe it.
One day.
I see it all the time. Yeah.
And it's not like, we're going on an event or we're going to this person's house for the weekend, we're going to a cottage, we're going on vacation. We love spending time together. But it's those days when there's really nothing to do, or I'm just here to help you, that I think it's tough for people when they retire to adjust to that.
It is. And you see it all the time. So it's important to kind of get in the picture, get in your mind, what do you want to be doing? And that's totally person specific. What do you want to be doing? It start thinking, okay, when I retire or when I slow down, because business owners don't want it, but at one point you'll either slow down by choice or you'll be forced to slow down because you're going to get sick or you're going to get a disability.
Sure, your blood pressure's too high.
Yeah,
you can't work.
You lose your hand. I don't know. God forbid you lose your hand, but
no, but maybe you get diabetes. I mean, who knows, right? Yeah, for sure. You need to rest more.
You're going to have to slow down at some point, and it involves figuring out, okay, what do I want to be doing? Do I want to stay on the golf course?
Do you enjoy golf? I sense that you enjoy those conversations the most. Yeah, that's what you love about your job. Eh?
I love it. I love doing that. I love finding out about people. I love seeing what people love to do. I have 2 clients who want to go on a Rhine River cruise. They're both retired now. Actually, I have more than 2 clients.
I think I want to go. I want to go on a Rhine River cruise. I want to go on a Rhine River cruise too.
My last. 2 of my last 5 clients one of their big vacation goals were to go on a Rhine River cruise or a European river cruise.
Sure, yeah, the Danube or whatever.
So I name it the Rhine River because one of them actually want to do, and I love doing that. Now, and they're on track. Both of them know that if we save, we're gonna be on track to do that.
Wow.
So
it's good to have a goal in mind. I think
you have to have a goal. You have to plan your life.
Got to be visualizing something in your head.
Right. You have to plan what you want to be doing outside of it. The mechanic, he likes to go on the yacht, And because when he drives me home, he tells me how they went out on the sailboat.
Yeah.
Not a yacht, a sailboat. But they went on the sailboat from Oakville to Toronto. And
That sounds like fun.
It does sound like fun. He's telling me about it. I'm like, can I join you? Like, that does sound like fun.
That sounds like a good Saturday, get there at 7 in the morning in Oakville. And
they go to the pool in there. And then he was telling me he had to go back because the pool wasn't open or something.
Okay.
So he had to go back home. And they only went for the pool in the Toronto. So things like that. So it's envisioning what you want to be doing. And you have to give it some thought. You have to sit down and give it some thought of what you want to do. And then you have to plan it out accordingly. You have to do the tough questions of, okay, I'm going to retire. How do I take money out of the company?
That's a tough one too. Yeah, a lot of people are sitting on big cash balances.
$500,000 in cash.
Yeah, sure.
And retained earnings, you're earning nothing. It's losing money daily because today's rates are going to be
a lot of people don't realize. I think a lot of non-entrepreneurs don't realize that a lot of entrepreneurs just take out what they need and they save their money. And they really, like, a lot of them are sitting on piles of cash. I know, and the CRA doesn't like it either. They want them to do something.
And that's why they changed those. That's why CRA hit those rules this year on, passive income.
Yeah.
I don't know if you're familiar with it or what happened.
Tell me about it.
I mean, so at a high level, basically they changed to limit you to $50,000 of passive income. So basically, what that is, if you had a $1 million
income or whatever,
if you had $1 million portfolio, and it's generating 5%, that's $50,000 of passive income. Anything above that, the government will tax you at a higher rate, and it'll take away from the small business deduction, which is the $500 again. So that gets lower. So how do you take money out of a corporation? How do you transfer the estate? And that's where I work with my team on a lot of that, and some of the guys behind me who are tax and estate lawyers, because they get into the nitty gritty of that.
Sure. Trusts and this sort of
trusts
stuff.
and life insurance is a big one for that.
Yeah,
of how to take it out, universal life, whole life,
do it,
because it's still it's still a tax-free way to take it out.
Universal life is complicated, but if you get into the right policy, it can be very beneficial.
I agree.
Very beneficial, yeah.
I agree. There's
children's education. I was told the best way to do that is by a trust.
How come?
It's to make them beneficiaries of a trust.
Could be.
Because you can pay for education through a trust is 100%.
Yeah.
Tax-free.
You could. Trusts are taxed at a higher rate. Like testamentary trusts are...
No, but not what type of trust. I don't know what family trusts.
Could be. They're still taxed. Well, because the trust is taxed itself, not the kid. I don't know. That's the first time someone's mentioned it to me. Normally people are like, oh, I should use the life insurance as the kid's education. And actually, I was just having this conversation with just one of my daughter's karate.
You're looking for clients everywhere.
While we were chatting, it just happened. And you got to be open,
sure,
to clients. And we were chatting, and she asked, she's like, should I use life insurance for my kids? What's your thought on saving for kids' education? And I see so many ads on Facebook about whole life insurance for kids' education. And I go back to, in my opinion, the goal.
So what do they borrow against the whole life insurance?
Well, what it does, so you buy a 20-year whole life.
Sure.
After 20 years, it's paid off.
Yeah.
And the cash value in it grows to whatever, 15 grand, 20 grand.
Sure.
And then they can use that 20 grand for whatever they want. Kids' education. And so the proponents of this will be like,
so the money grows inside the policy.
Inside the policy. Like a like a universal life, but it's a whole life one.
Sure.
So the money grows inside their tax deferred, and they could take a loan against it, or they can take the money out, and then they can transfer the
policy. They have to pay taxes on the loan when they take it out?
When they take it out, yes.
But if they borrow against it, they don't.
Correct.
Right.
And then they can transfer the policy to the child, and then when the child's 65, they could have like $500,000 or so in there.
So you think that's the best way to do it?
I think it depends on the goal. And I told the one of the moms, I'm like, if your goal is education, why not just use the RESP?
It's an interesting one too.
You're going to get 20% on it.
Yeah, the government's going to top you up.
Say, so why not get the money from the government?
There's your return on investment right there.
Exactly. They're going to give you 20%. If the money's for education, use it. And if you have extra money, then okay, we can do you can look at a whole life policy for it. But if the money is for education, if the goal is education, let's max out this RESP, because you're going to get free money from the government. You're going to get the tax-free growth.
Mm-hmm.
Well, it'll be taxed to the kid when they take it out. Mm-hmm. But the kid's going to earn, 10 grand when they're 18? If they do more, maybe, that's a different story. But, and so it'll be virtually tax-free to the kid. So use that first. And then if needed, use the whole life to supplement, or, an informal trust. So there's lots of different avenues depending on the goal for it, or the trust would be another one to to fill in on that.
There's a question here. It says, what's the biggest mistake people are making when it comes to finances? I think that answer to that question is not saving any money.
Yeah.
Okay.
They're not saving enough.
All right. So, that being said, so people need to save more money. And actually, a lot of people don't realize that saving money is actually really good for the Canadian economy too. Like, as if our savings rate is higher, it makes us a more competitive economy with the rest of the world. A lot of people don't understand that. Like, is that America is the least saving economy in the world. They don't save any money. Those people.
Yeah.
I mean, not those people. The Americans.
The Americans.
They don't save any money. Like I think they have one of the worst saving rates in the G20. But Canada is actually pretty good because of the TFSA is one of the things that really helped us a lot with our savings rate.
Yeah.
But second to that, not saving enough money. What is the biggest mistake the average entrepreneur is making? Is in terms of his financial picture. Is it just not knowing his net worth or not knowing her net worth?
I think that's part of it, and I think they don't have a plan. They just try to do everything themselves, and I think that's a mistake for most people. You need if imagine you were going to Disney, how would you get there? You'd buy a map, or nowadays you'd get the GPS. Sure. You'd plot in your location now. You'd plot in Disney World, or maybe we're going to Disneyland, California, and then we're going to drive there.
Sure.
And along the way, we're gonna encounter some roadblocks or something, but we're gonna drive there and we're gonna get there on time and at whatever time it says. But most people don't have that plan. They say, "Oh, I wanna go to Disney."
I'm gonna say your analogy doesn't work for me.
Okay.
Because I think your analogy reflects what people are doing and why it works.
Okay.
But I would say I'd rather fly to Florida.
Well, the flying.
But I'm not going to fly the plane.
Exactly. So if you want to use the pilot analogy,
that's no. Okay, you can buy your GPS and get in your car and put your family in the car, and for 3 days or 24 hours, you can sit in a sweaty, nasty car with your screaming
and hear your kids yelling.
Yeah, and maybe you think you'll save a little bit of money, or you can just get in a plane and there's a professional guy who'll fly you there. I think that analogy is what you're talking about.
That's a great analogy. And it's one I actually use at the same time, sometimes too, is just the pilot analogy.
Yeah, I mean, are you going to fly the plane too? Are you going to learn to fly the plane before you go to Florida? Like, how are you going to do it?
You have two planes you can go on. One's going to give you the manual and all the things, or you can go one with the experienced pilot.
Yeah, I mean, so I think you're saying it's just they don't have a plan.
I think it's they don't have a plan and they don't know what to do. And that comes down to, having a plan. And you think I ran into one person the other day and they're like, oh, I think I'm going to want to retire down the road and maybe move to Quebec or something. And I was like, okay. And we chatted a bit and they're like, and I thought about it afterwards. I'm like, well, first of all, if you could do that, and this was just in my own head afterward, I'm like, if you could do that, would you? Because if you would, then we can come up with a plan to help you do that. So I think most people are like, I think I could do it, but they don't really know for sure. And if they could, they might be, I don't know, maybe they're afraid to act on it, or so they just don't know. They're like, I'm just saving up a little bit here. I've maxed out my TFSA. I've maxed out my RSPs. I think I'm okay for retirement.
Here's another point of interest. I'm going to throw it out at you here. I think that if you walk up to someone in my office or on the street and you said, what out of one being nothing and 100 being fantastic, what's your financial savvy?
They're going to run away.
No, I think if they had to answer the question, most people would say 70, 80, something like that, right? And then if you asked them what their net worth was, they wouldn't be able to answer the question. Yeah. I think 99 out of 100 people wouldn't be able to answer that question.
I agree.
What's your net worth? And they would be like, what is net worth?
They'd be, what is net worth?
Right? No, seriously.
No, I agree.
Right?
So I think all the time.
I think the problem is education. I think they should teach this stuff in high school.
Yeah.
They should have a financial course from grade 9, grade 10, grade 11, grade 12. Yeah. One of them's on credit cards, interest, debt, how that works. Yeah. Another one's on assets and how the different kinds of assets. Another one is on calculating your net worth and different kinds of investments. Like not CFP level type of stuff, but here's how the stock market works.
Basic knowledge.
Yeah.
Like this stuff should be taught in school. How to manage money,
It's always informal. Some teacher takes you aside and says, here's how interest works. Instead, there should be a course. People should be told in grade 11, this is a credit card. Yeah. This is how it works. And this is, you see this picture here that this credit card company has on their marketing of two people running through the field with holding hands and putting their hands in the air. No, it should be, those people should be chained and locked up. Yeah. Would be the actual way it is for people with credit. Yeah. They get locked into this stuff. And there's a reason why there's get out of debt stuff on all the buses when you drive around.
It's a spiral. And I think, that's really lack of education is a big one. And people don't like to talk about money. I read somewhere and I wish I remembered where, but it was like more they did a study, and more people would rather talk about how often they have sex with their partner than talk about finances.
I think they'd rather stand physically naked in front of you than financially naked in front of you. I think there's more shame.
I agree.
Like, I think if you said to somebody, I want to see right now, I want to see you naked, or I want to see your financial picture, choose.
They would do that. Yeah.
I don't know. I can't say which one people would choose, honestly. I mean, it's like people are very embarrassed of their financial situation.
Yeah. Good or bad. Like, if it's great.
No, I think if it's good, they're like, screw off, asshole. But I mean, if it's bad, they're like, they pretend it's not. And I think it's important that people have these conversations and realistic, like, oh, you know what I want to do? I want to live in Quebec. Well, that's not possible, actually, based on your situation.
Yeah.
Unless that means you're moving to Quebec, selling your house, and just working there. But if retiring, it's not going to work. Because here's the cost of real estate in Sherbrooke and this and that and everything else. Like, if you sat down and put it through.
They need to they're not educated. They need to figure it out, and they need to you need to realize the government's not going to help you. CPP isn't going to cover you at all. If you're a small business owner, you're not even going to get CPP probably.
No, for not. You know? Well, I
depending how you paid yourself.
I still pay CPP, not much.
Yeah.
I actually, there was a plan we did to get out of paying CPP, and then the government closed the loophole. It was called the, did you know about that?
No.
You would pay yourself under a private employee bonus plan.
Okay.
And it was line number whatever on your T4, and it wasn't the income line, so you didn't have to pay CPP. The company or you personally.
So there you go.
So I did that for a couple years, and that was great. And then I whatever. Yeah. So most of them aren't paid CPP.
So you're not paid, and you're not going to get much. I mean, the max CPP this year is about, and I forget the exact number, but it's about $1,100.
A year?
A year? No, a month. Sorry, $1,100 a month.
$1,100 a month.
You know,
that's significant. You can live on that. If
most people don't get the max. Most people get around, like, say 70 or 80%. So most people, the average CPP.
Like, if two people are living together, $2,200. Is it taxed though? Is it CPP taxed?
Yeah.
So it's $1,100, and then they take taxes off of it. Come on.
Yeah, so you're not going to get much from the government. So don't rely on it. You know, old age security is another one. You just don't rely on the government. Don't rely on your house either. That's another one people tell me. I'm going to sell my house and live off that.
Okay.
Great. What happens if market goes down? What happens if housing crashes? I don't know.
Yeah, I don't know.
You know, I think sell your house, where are you going to go?
I think you're right. I think there's actually a strata in our society being created between people that have defined benefit pensions and those that don't. Massive strata difference.
I agree. Yeah.
Like, it's people don't understand. Like, and I don't mean to pick on teachers, but if you looked at the salary, the lifestyle, and the benefits, and then the after retirement benefits, it's the equivalent of making like $300,000 a year. I think. I think we're probably paying teachers like $300,000 a year, because you think about it, they get what 85% of their salary.
I don't know offhand, but
I'm talking crap. But if you think about like what someone like who didn't have a defined benefit pension would have to get paid and disciplinedly invest over a 25-year career to have that kind of retirement, it would probably be in the range of like $250,000 to $300,000 a year.
Yeah,
would be what they'd have to earn over the whole career in order to achieve that level of security in retirement.
I agree. It's something like that. It's got to be. I mean, and they might say that they contribute to
the
pensions too, and they do contribute from their salary. Part of it goes to pay for it.
Yeah, but defined benefit is got.
But defined benefit is like.
Yeah, sure.
You know, you live to 105, you're being paid to 105.
Exactly.
You know?
Yeah, you're gonna you can go. You can I mean, and the lifestyle. I mean, that's a great job to have.
Yeah.
And I think a lot of people don't. That's the other thing. You could teach kids in school, like, hey, think about this. When someone's making you a job offer, you really want to look at this actually.
Yeah. And they don't do that.
They don't do that. And they're not talking to anybody like Blake Linklater saying, hey, son,
you should
look at this. Yeah. People. The problem is the other thing about financial advisors is people don't roll around to it till their mid-40s.
It's true. I've noticed it in my just dealing with people in the 5 years. I don't know. So I'm 38. I'm an anomaly. I've always liked finance.
Okay.
But I notice the switch around 40. Mm-hmm. Something happens at 40 where people are like, oh, I got to start thinking about this now. Mm-hmm. Like, I have younger clients who are young, and they kind of get it. They're like, whatever. They don't really care. I've tried to convince people in their early 30s who
The
had
time
a kid.
to buy insurance is when you're young as possible.
But they don't want to hear it, or it's like it's a much harder sale and a much harder job to convince them.
Like if you buy a whole life policy when you're 21, it's amazing.
I wish I'd done it.
It's
I wish my dad had done
amazing.
it.
Yeah, sure.
You know, I'd be 3 years away, be almost paid off, and
Yeah.
who knows how much would be in there. And,
Yeah, for sure.
So yeah, but I've noticed the switch. Something at around 40.
Mm-hmm.
You can see it in people, and I saw it with one of my recent clients when we met again in May, and he's 40 now. And all of a sudden, I noticed now the talk. He's like, I got to start thinking about insurance and my wife's retirement because she was a stay-at-home mom, and it was like, oh, there's the switch, and you just notice it. Mm-hmm. I don't know what it is about that age. You know, you're 25 years away or 20 years from retirement.
Yeah,
but something.
You know what? I got lucky because I went to a lighting conference, and there was a speaker at the show that did that net worth thing. He's like, how many people? You're all business owners out here. Y'all business owners. I'm like, yeah, we're all business owners. Yeah. Who thinks they have highest financial savvy?
Yeah.
Right. Okay. How many people can tell me their net worth right now? Crickets, buddy. Wow. These are business owners, dude. Like a lot of them are very successful. 2 or 3 people out of hundreds put their hand up because they didn't know their net worth. Well, it's like, if you don't know your net worth, how can you make any financial decisions whatsoever?
It's true. And I find business owners, they're great at what they do. I love them. You know, they're great and they're great clients, but they just don't. That example fits it perfect. They don't. The finances take a back seat to them in that they just don't know enough because they're so busy running their business that they're like, oh, I forget about, you know, do I have to do that? What's my net worth? Or, oh, I'm going to
What's
retire.
the value of my business?
Or what happens if I,
what's
the value of it if I want to sell it?
Like, you know, if you have a conversation with somebody, okay, about a business, okay, about the value of a business, and you say, oh, what's your business worth? Oh, my business is worth $1 million. Okay, what could you sell it for on the open market? Well, I don't know if it would sell on the open market because of this, and this. Then by definition, it has no value at all, actually.
Yeah.
It has none. Like people are like, what are you talking about, man? I make this much money. I said, look, if you can't sell it on whatever you can sell it for on the open market using a business broker, whatever you're going to do, that is the value of your business.
Agreed, 100%.
End of the story.
Yeah.
Not this, oh, well, I make, you know, this much money per year and I times that by 6 or 3 or I take my inventory. No. Your business is worth what it will sell for on the open market. Yeah. Period. End of the story.
Agreed. You know,
and if you can't sell it on the open market, then it's worth nothing by definition.
Yeah. And then we got some good tax planning to do when you pass away or when you decide to get rid of it.
Well, nobody does those non-share deals. You ever seen anybody that bought the shares of a small business? I've never seen that.
Never seen it.
You know, it's like you can. If you sell the shares of your business, you get the money tax-free. I never hear about anybody selling the shares of their business. It's always an asset. Yeah.
Yeah. You can do it the share way, but it's always
the share way is the best tax way because you get it tax free up to $800 or whatever $1,000 it is. But these guys, so some people do sell their businesses. I shouldn't say it, but I'm talking people that are coming to retirement and I'm ready to let it go. Yeah. You never hear about share sales. It's always an asset sale. Mm-hmm.
Maybe because they don't know. I don't know, but that's you know.
No, they know. They know because I've bought businesses.
Okay.
And it's like I'm not buying the shares. They're like, well, then you have to pay me more for the business. Okay.
And they will.
But they don't get as much as they would get because they have to pay the capital, whatever taxes they have to pay. Is it capital gains on the asset sale?
Could be. I forget off.
Yeah, I don't know what, but they have to pay the taxes on the money now, right?
You got to pay taxes.
So, wow.
You know.
Well, that was fun and interesting, Blake. Awesome. Okay, what else do we have to talk about here? Wills. What about these 2 wills?
2 wills. So if you're a corporation, not necessarily sole proprietor, but corporate business, it makes sense to have two wills. One for you, one for yourself, and one for the business.
And this allows you to transfer the shares tax-free to your partners?
Exactly.
Yeah.
Not necessarily the share, but allows you the assets of the business to go tax-free to wherever you want them to.
Yeah.
You know, it's just something people don't think about. Never, I tell people that, like, oh, really? Why? And hey, it's just a tax. It's a simple maneuver to help you keep more money.
And it costs you like $200 extra on top of your will. If your will's $800, it's $200. You get $1,000.
Exactly.
2 wills, and you need someone to tell you how to do it. But
yeah. You know, the lawyer can work with you through that.
I'll tell you, death is an issue, dude. I'm an executor of an estate. What
my goodness,
a pain in the butt that is.
People don't realize it.
Oh, dude, I can't wait to talk to this girl who's the professional executor I was telling you about.
Yeah.
Dude, it's so disgustingly difficult to do this, man.
It is difficult. It is, and it's difficult because again, people haven't prepared. Most people have
No,
not
the
prepared.
one I was super prepared, but it's just like people like are. First of all, I'm not the child.
Okay. Oh, okay. Yep.
I'm the nephew.
Yeah.
And there's children. And then I'm not going to say too much about it, but it's like people continuously throw barriers up in front of you the whole way along, right? It's nuts, dude. I don't like this. That needs to be reformed, man. The way we die needs to be fixed. The way we die.
Right to our MPP on that one.
Seriously, it needs serious.
It
needs serious reform, man.
A lot, and I can see it, and thankfully, it's like I haven't had to deal with it. My parents did.
If you
with
don't
theirs.
have a will, you're crazy.
Oh, absolutely agree. Doesn't matter.
Like if you don't have a will, stop everything you're doing right now and go and do a will.
Yeah.
Right away.
Agreed.
Like that's it. Like that. Forget about financial Linklater Group and this and that. No, first thing you need to do is get a will.
Yeah.
I don't care how you do.
Especially if you have kids.
If you have kids, I mean, you're going to leave a friggin' disaster behind if you don't have a will. It's crazy, dude. So many smart people. Oh, that's the other one. Net worth. Yeah. How many people have a will? Same thing. Like a huge percentage of people don't put their hands up, dude. Or when's the last time you updated your will? 10 years ago?
Yeah.
Oh, you're divorced now, but you have the same will? Like
It's crazy. Just
dude.
Get the will done, and you know what, and get the life insurance in there to take care of some of the stuff.
For sure, because you can get the check a couple weeks later on that life insurance.
You can get that check
sure
ASAP. Faster than you can get the RSPs or the whatever other investments they can get. They're going to take longer. That life insurance check,
boom, beneficiaries get it right away.
Exactly.
Unless you're an idiot and you put your life insurance to the estate of yourself. Don't do that. Put it to the beneficiary.
Another common, like we're talking about estate planning pitfall I see is they say, two sisters say my sister A is gonna get the cottage, which is, let's just say it's $300,000.
Sure.
And worth $300,000.
Sure.
Sister B is gonna get my RSPs worth $300,000.
Sure.
Do you see the issue there?
Sure.
The RSPs will go right to Sister B. And Sister A is going to have a tax event happening.
Yeah, for sure.
It's
not fair.
Not fair. But I see it all the time.
I bet.
So,
yeah, it's tough. But you know what? At least they have a will.
At least they do have a will. So
at least they can get through it with the will.
Yeah.
You know what I mean? And they can say, Dad screwed up, he didn't know or whatever, and God love him and we forgive him. But if they don't have a will, it's crazy.
Just crazy.
Yeah.
Get it done. It's $800. It's $1,000. What It's,
or to go online and do it for free at will.com.
Any will is better than nothing.
Yes.
Just
for sure.
You don't want to spend $800. Go write it down and get it done.
Okay. How many years you been in this game?
5 years.
Have you taken anybody from plan to retirement yet?
So what I've done, biggest moment, I switched firms a couple
times. Move a little closer to that mic. You backed up a little farther.
I switched firms a couple times.
Mm-hmm.
So I started my own firm about 2.5 months ago.
Okay. Whoa.
So we're brand new into the just running my own financial services firm. The moment we had that I remember, and I'll never forget it, is we were met with a couple, husband and wife, and 62 and 55. The wife was 62. And he lost his job about a year ago. About a year before we'd met. We kept in touch. And lost his job, VP of marketing, high profile job, VP marketing, whatever. And he goes to me, he's like, I've been off a year now. I don't know if I have enough to retire, or should I go back to work? And at 55, he's like, I'm going to get the job that I want at 55 when I got packaged out because I was just older. Anyhow, so we sat down, and they had some money saved up and everything, and we did the math. And I came back to him, and I'll never forget it because we'll use their names. We had Jane and John over there, or different names. Jane, and I looked at John when he came in. He's like, Blake, so tell me about it. What do we got? I'm like, John, you're gonna be okay. And he's like, well, what do you mean? I'm like, John, we did the math based on the amount that you want to live on. So they wanted to live on like $6,000 after tax income a year. Including
a year?
Sorry, a month.
Okay, 6,000.
Yeah, good. Thanks for correcting me. $6,000 a month after tax.
Okay, I can live on that.
Their house was paid off, and I'm like, you're gonna be
two
okay.
People, and they're not going to work.
People,
they're going to go golfing and do
exactly.
whatever they're going to do.
Yeah.
Okay.
And so I looked at him, and I'm like, you're going to be okay. You have enough money to retire. And so it wasn't his face that got me. It was his wife's. Jane, who looked at me just like her jaw just dropped. And was like, my husband never has to work a day in his life. and it was like they're just a sense of total freedom that they can do whatever they want.
Sure.
And
Now it's a choice.
And now it's a choice.
Sure. If he wants to go back to work, part-time, consult, do whatever he wants to do.
Exactly.
Yeah.
And it was at that moment where I'm like, okay, this is the business for me.
Yeah.
That's probably the closest we'd say that we got to like retirement from, here we are to retirement.
Sure.
I have lots of clients who have just retired now and they came on board and we switched. Or some younger couples that are working up for, I'm 38, so they're about my age and working towards kids' education and everything. And the business owners, they run the gamut from maybe we're just doing insurance with them to take money out of the corporation or helping them with some estate planning when that happens. So they're planning folks, but they're a bit different too. They're sometimes just a one-off solution in the interim.
Sure. I want to ask you something.
Mm-hmm.
And I don't know if we can answer this question, but let me give you a scenario.
Mm-hmm.
Okay. So let's say I want to save some money. Okay, we're gonna take the tax benefits of our RSPs out because I don't like our RSPs.
Mm-hmm.
I'm sure a lot of business owners don't like our RSPs.
Yep.
Right?
Doesn't work. Your income's too low.
Yeah,
your taxable income's a bit low. There's a lot of other different reasons we can't get into.
Yeah,
on
it's
this.
my personal financial story. I don't like RSPs, but so we take RSPs aside, and you say, okay, you have some money saved.
Mm-hmm.
What would you rather do? Would you rather save it and put it in some sort of financial vehicle, or just pay off your mortgage? Because the way I've always looked at it is if you have some mutual funds or exchange traded funds and they're going to perform at 4% at medium risk, which is probably pretty fair, right?
It's fair, yeah.
Right? And you have catastrophic loss in the market and your mortgage is 3.1%, right? It's really only a spread of 0.9%.
Yep.
Right?
Yeah. Yeah.
So wouldn't you rather just pay off the mortgage? Wouldn't you advise your client, say, look, for the medium risk of the market, why don't you just pop this into there and be done with it? Because you're paying Peter to pay Paul.
Yeah.
You're robbing Peter to pay Paul. You're robbing Peter to pay Paul. That's the way it is.
Yeah, it's there's a lot of different factors at play here.
Okay, so we take the tax. Okay, RSPs, yes.
Take that away. There's a lot of factors. How much have you saved up? And I say that because I've actually
this is saving both ways.
I've done both. I've told the client both. I've told
Right.
one, you should probably, let's put more into investment. And I just recently told one, when you get this, they're coming into some money, when you get it, let me know, we'll chat. But we're looking at that scenario, this is the balance on your mortgage. You might just want to pay it off. So I've told them both.
Yeah. Because then they're freeing up money to invest.
Because they free up and they're retired. In that case, they were retired already.
Sure, yeah.
And, working part-time here and there. So
you're saying this is specific to the situation?
It's specific to the situation. How much is left on the mortgage? Sure. How many years are left?
Right.
How much?
But that is a real question. A lot of people are not knowing. Because when I started thinking about finances, I noticed that we were investing in mutual funds and this stuff, and then we were paying this mortgage that wasn't 3%.
Yep.
Okay. Back then it was more. It's 5%, and the mortgage was higher than the investments were performing. And I had a risk on the investments, and I thought, what am I doing that for? You know what I mean? And but a lot of people aren't asking themselves those questions. They're just looking at it and letting it fly.
Right. Or they just assume, I'll just pay off the mortgage. I'll pay everything on the mortgage, and then
I'll invest.
And then I'll invest. But what they don't take into account in that is, I'll do it later. I'll pay off everything now. But what if you never get there? What if something happens? What if you sell and move to another? Then your mortgage just gets extended again. Mm-hmm. So there's a bit of a balancing act. It does get into very personal specifics for each person what's the best route on it, and a lot of different factors. Really, how much have you got saved? How old are you on it for that scenario?
What's your educational background?
Educational, yes. I went to college in Buffalo. Okay. So I actually went to Canisius College.
Are you American?
No, I'm Canadian.
Okay.
But I always wanted to play hockey. I was a hockey goalie, and I act like it. I'm a hockey player.
I was a hocky goalie too.
Okay, cool. So we're a little, goalies are we're a bit odd.
Yeah, they're oddballs. I agree.
So, and I fit that perfectly. So I went there, played at Canisius. I made it as a walk-on. Okay. But I graduated with, I started with 2 years in accounting. Okay. Then I realized I don't want to be an accountant. No one likes their job in the class. Mm-hmm. So I switched to what did I go to? HR, because I love working with people. Mm-hmm. And then in the year 3, I'm like, I don't like HR really, just a lot of legal stuff.
Sure.
So I actually ended up graduating with just management, just a Bachelor of Science in Management.
Okay.
And then with a minor in HR from Canisius. And then Actually, I went back to school in 2010 to get my teacher's degree. Because in 2008, I lost my job. I was like, oh, what do I do? And actually how I came to an advisor was my advisor said, why don't you become an advisor? You're good with people, you're knowledgeable, you work hard. And I was like, at the same time, but people said, why, you love teaching, you love helping people, why don't you become a teacher? So I went back to school, got my teacher's degree in business and phys ed, back at Canisius College, actually. And then realized, there's no jobs in teaching.
Okay.
And it was fast forward, I guess 2 kids later, it was like I need to earn more than the minimum wage, and I just wasn't getting on the supply list. Had a couple private school teaching things,
Sure.
but nothing that was moving me forward, and made the switch called up my advisor again 5 years later and said, tell me about it again. And got me into that. And I did my securities license, did my life insurance, and was hired within about 2 weeks of the conversation.
Do you have a plan for yourself?
Like a financial plan?
Yeah.
Yeah.
Do you use a financial planner, or are you your own financial planner?
I use my own.
Some people do that. Some financial guys have their own guy.
There will come a day where I think I might go down that route, because I spend, and the reason why is I spend so much time on my clients' goals that, if I spend more time on my own, it's taking that away. And to get outside eyes is a really good thing.
There's something about someone talking to you about what you actually want to do and being realistic with you and breaking things down for you, and it's hard to do on your own.
It is hard. So, and when the markets go down, the emotion comes in, and so it is something I think down the road I'll look at more.
I want to ask you one more thing about the education. Okay, it's in the same theme. Okay, so many people enroll into education with no look at what jobs are available and how they're going to get their money back on that investment and whether that investment is worth anything in the job market at all.
Yeah.
They go and spend thousands and thousands of dollars on education. In the States, it's even worse.
Yep.
And they spend thousands of dollars, and nobody ever says to them before they walk in the classroom door, like, this education is useless in the open market. Nobody cares if you have a degree in X, Y, Z. Do you want to continue? Do you want to spend $40,000 a year or $20,000 a year, whatever it is on this? Because it's absolutely useless to you when you get into the open world. Do you know what you're going to do with it? No. Maybe you should just go work and think about how you can spend your educational money on something that is actually an investment for you.
Yeah. I agree. More recently than before, especially the way the economy is going, and just a lot of the quote unquote gig economy, and I think, I don't know. I went back to school for teaching and everything, but I'm not a big fan of the teaching system.
Sure.
It doesn't.
It's a meat grinder, dude.
It's a meat grinder. It's still being taught the same way 50 as it was 50 years ago, and
it's a lifer job. It's a golden handcuffs lifer job.
Yeah.
There's great teachers out there. Yeah. Everyone picks on teachers. You know why? Because everyone's had teachers.
Yep.
Not everybody knows a firefighter or a police officer or someone who works for the Ministry of Health.
Yeah.
But we all had teachers. And we all know that we had good teachers and bad teachers, and it didn't matter. They all got paid the same.
Yeah, exactly. And that's the thing. That's my own personally, I don't agree with, but that's the way it is. And for my own kids, my wife and I recently did our own, our financial plan for the kids. We got on the same page for that and how much we want to pay. And if they want to be something like a nurse or doctor, yeah, definitely, you're gonna have to go back to school and do it.
Okay, last question.
But I'm okay if they don't.
Yeah,
as long as they're learning. Don't get me wrong, I want them to learn.
Last question for you.
Yeah. Who
handles the money in your house? You or your wife?
I do. Actually.
Oh, okay.
I think I'm an anomaly on that. Most people I run into the wife, but in my house, it's I run into it. But my wife is she's got a big say in it, so I control. But she's probably got the power.
The truth is coming out, eh?
I'll run it.
So you're like her secretary.
I don't know.
This is going to be on the internet.
I know. That's why I got to think about this, because she's going to watch it too, or listen to it, and so are her friends. I guess you could say that. It's like, I'm putting all the input, making sure we're on track, and then she, kind of okays, can we do this? But it is a bit of a, we do work together on both of it. But it's,
she's the boss. Come on, just say it.
Yeah, I don't know. I think she's had a bigger say in the last month, and probably a bigger involvement in the last month than she's ever had. So, we'll give her the boss on it. We'll give it to her.
Thanks for coming. On the show, Blake.
Thank you, Michael.
Whoa, getagripstudios.com. Hey, man, do you want to start your own podcast? You ready to start your own video blog? What is it that you want to do? Okay, so go figure out all the technical stuff first. Or just get your message down. Figure out how many episodes you want to put out. What is it that you want to do? And Get a Grip Studios will take care of everything else. That's right. You just sit down in that seat right there with your guest, or you put your guest virtually from anywhere around the world on the screen there and have a conversation. We'll record it, produce it, distribute it on all the channels, all the media, RSS feeds, Apple, Google, blah, 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 you name it. We'll do it. GetAGripStudios.com. Hey, thanks, Blake Linklater, for being on episode number 8 of the Get a Grip on Life podcast. Enjoyed my time with you, man. Smart guy. People need to start, you know what, you say, your client's 40 to 65. I think people should start thinking about this when they're 18 years old, maybe 14. So the younger, the better, folks. Go to the Get a Grip on Life podcast website, which is getagriponlife.com. Subscribe on YouTube. Leave us a review, man. We love those things. If you think I'm crappy, tell me. If you think I'm awesome, tell me. If you think I'm somewhere in between the two and I need to learn and get better, let me know, man. I'm happy to take it. And if you want to come on this show, if you want to be a guest on the Get a Grip on Life podcast, there's a guest form on the site as well. Fill it out. Check it out. GetAGripOnLife.com. Thanks for listening, guys.